All right. So this morning, I'm going to be discussing the COVID-19 funding streams and their potential impact to your organization. My name is Amanda Ruhlman, and I'm an audit manager here for SEK. I joined the team in 2009. I have about 16 years of public accounting experience. I graduated from York College of Pennsylvania, and I earned my nonprofit certification 1 and 2 through this AICPA. I serve on 3 different nonprofit boards, 2 of which I am the board treasurer. I am a mom of 2 competitive gymnasts and a pups we just rescued from the Turks and Caicos Islands. Before I get started, I wanted to clarify what today's presentation is and is not. Today, I am simply summarizing some of the more common COVID-19 funding streams that were made available to organizations since March of 2020, many of which eligibility has expired. Each funding stream is different, and it is accompanied by different rules and regulations. We'll touch on a couple of these differences to emphasize the importance of knowing what types of COVID funding your organization may have received and additional financial reporting that may be required. Finally, I want to provide you with a list of resources that you can utilize to drill down on the COVID funding streams your organization receives to identify a full list of regulations and financial reporting requirements. It is important to note that these resources are continuously being updated as additional funding streams become available and further regulations are being clarified and refined from reporting agencies. Be sure you are utilizing the most recent resources documents at any given time. The COVID-19 health pandemic crisis created a variety of challenges for organizations across our communities, and the Treasury Department responded by flooding the economy with financial support to help organizations preserve and recover from these unprecedented times. I'm going to start off with the most known COVID-19 funding stream, commonly known as PPP, or the Paycheck Protection Program. This funding stream was offered in 2 different cycles by the SBA. The main purpose of was provide a small business with resources they need to maintain their payroll, hire back employees who have been laid off, and cover applicable overhead. The amount of loans was the equivalent of 2.5 times an organization's average monthly payroll. This amount could be utilized over a 24-week period for qualifying costs such as payroll, health insurance, mortgage interest, rents, and utilities. Please note, there are some differences between the 2 rounds of funding. For example, eligibility for PPP2 required a 25% or more reduction in gross income from any quarter in 2020 relative to the same quarter in 2019, or a loss when comparing income in total year over year. As of May 31st, 2021, the SBA approved about 11.8 million loans, totaling about $800 billion, funded by 5,500 different lenders. I will discuss the importance of the funding streams CFDA number later on in my presentation. I wanted to simply make a mental note for all of you that the PPP loan CFDA number is identified here in green. The next funding stream I want to identify this morning are provider relief funds. The purpose of these dollars is to support healthcare providers in the battle against the pandemic to prevent, prepare for, and respond to the coronavirus. These funds are provided in 2 different ways. First, through general distribution to providers building Medicare fee-for-services, and secondly, targeted distribution to address COVID-19 challenges such as high need and vulnerable populations. Approximately $178 billion is available through the PRF funds for direct payment to eligible providers. Please note, the relief funds have a red CFDA number. CRFs, or Coronavirus Relief Funds, were funded through the Treasury in the sum of $150 billion. Such funds are to be used for necessary expenditures incurred due to the public health emergency incurred between March 1st of 2020 and December 31st of 2020 to cover a broad range of expenses. Such include, but are not limited to, the purchase of health equipment, testing supplies, medical work wages, public health communications, and food delivery. Distributions were made to states based on the 2019 population with a minimum of $1.25 billion per state and direct payments to local governments like townships and municipalities. Educational stabilization funds comprise of about 15 specific programs, approximately $30.75 billion funded through 4 different grant programs. I'm sure most of us have personal experiences about some of these dollars as we quickly became educators within our homes overnight, and my 7-year-old daughter, who is 50 pounds, now carries a book bag weighing 13 pounds, 25% of her body weight, as she is now required to carry a computer back and forth to school each and every day due to the daily unknown ramifications of the pandemic. The most common ESF funds are the HERFs, Funds for Higher Education Emergency Relief Funds, provided to institutions to provide emergency financial and grants to students who live and their lives are disrupted by the pandemic. There were 3 different HERFs issued throughout 2020 and 2021, funded through the CARES Act, the Corona Response and Relief Supplemental Appropriations Act, and finally, the American Rescue Plan. It is important to note that each HERF has its own eligibility requirements, and they are all different even though they have similar CFDA numbers. For example, unlike HERF 1, HERF 2 does not require 50% of the institution's fund to be spent on student grants, and level funds are more flexible. Again, this example alone is evidence of the overwhelming rules and regulations that are accompanying the COVID-19 funding streams. As noted here, the ESF Funds CFDA number are noted in red. The Coronavirus Food Assistance Program provides direct federal assistance to producers of agricultural commodities where prices in the market supply chain have been impacted by the pandemic. It is estimated that their funds account for $16 billion and intended to benefit producers of crops and food suppliers such as farmers markets and restaurants. As noted here, the CFDA numbers assigned to these funds are indicated in green. The COVID-19 telehealth program allowed for about $200 million in funds to be available to provide connected care services to patients at their homes or any mobile location. Who would have thought 10 years ago, one day you would go online 24 hours a day and within minutes be talking to a healthcare professional that could provide you medical assistance practically immediately compared to the traditional making an appointment that isn't for a day or two, wondering how to treat yourself in the meantime, and then by the time the appointment comes around, you're already starting to feel better. Please note, this funding is indicated with a red CFDA number. If you're keeping score, this is 2 green and 4 red. The Employee Retention Credit, or ERCs, are credits that were rewarded business efforts to keep employees on their payroll during the pandemic. An organization is eligible when they have a full or partial suspension of operations of trade or business during a calendar quarter because of the government limiting normal business activities, or the organization has significant decline in gross receipts by a specified percentage as compared to the same quarter in the prior year. The credit applies to qualified wages, including health plan expenses paid during a specific period in the calendar year. The credit is taken against the employer's share of Social Security tax. The Economic Injury Disaster Loans, or EIDLs, are funded through the SBA. There are 2 funding streams associated with these dollars, and they are treated differently for audit determination purposes. The overall purpose of the funding stream is to meet financial obligations and operating expenses that have been met had the disaster not occurred. Such expenses could include working capital, normal expenses like inventory, office supplies. Such funding was often pursued by organizations that needed funded beyond funding streams available like PPP loan. As it relates to the emergency advance funding, the advances are not similar to grants and don't have a typical requirements that come with the grant, other granting requirements, and they are not needing to be repaid. Disaster assistance loans, on the other hand, are intended to provide loans to organizations with low interest 30-year notes with no prepayment penalty or fees. The rate for nonprofit organizations is 2.75%. CESF Funds, or Coronavirus Emergency Supplemental Funding Program, was established to assist eligible state and local governments responding to the pandemic. This includes overtime for state and local officers, personal protection equipment, medical needs, and other supplies. Approximately 1,800 different awards were provided in the amount of $847 million for fiscal year 2020. Finally, the last COVID-19 funding stream we're going to talk about today is the Emergency Rental Assistance Program. The purpose of this dollars is to assist eligible households that have difficulty making timely payments on rent and utilities due to the pandemic. Other qualifying expenses include home emergency costs, costs surrounding home stability, and eviction prevention. Payments for these funding streams were made directly to the states and certain eligible government providing federal assistance. As you can see, we are very briefly touched on only 10 of the most utilized COVID-19 funding streams in our community. And there are many different streams affecting all industries and all trades of business all over the country. The financial community has never experienced such a flood of monies or even more rules and regulations of how to account for and spend those monies than could have ever been imagined. Hope this first part of my presentation amplifies the need to know what COVID monies your organization has received. Now let's take a look at the economic impact of receiving such dollars. Between March of 2020 and today, it is very likely your organization has experienced an unexpected shift in revenue streams. Have you taken the time to think about what financial reporting obligations could be required due to the shift in revenues? We're going to take a look at this question from both a state level and a federal level to determine why this question is so important. At the state level, this issue is more significant for Pennsylvania organizations than Maryland organizations. This is because Pennsylvania requires state filing for most organizations that receive $25,000 or more in contributions annually. This filing also requires a financial statement requirement. If your organization had an increase in support by donors or foundations that increased total contributions, does your organization now need a compilation, review, or audit to be performed by an independent CPA? There's one important note when calculating the PA contributions. This calculation does not include the government grants, which were funding, which we previously talked about on the other slides. As noted on the chart taken from the PA Charitable Organization Registration Instructions, it will be very easy to miss an increase in financial reporting requirement and a step up in CPA services that could be financially costly depending on the size and complexity of an organization. If the additional services are not identified soon enough to engage the needed services, they could potentially require late penalties and filing fees on top of the increased cost in the service. As it relates to Maryland, there are no such requirements at this time. The economic impact of a shift in revenue sources is much more significant at the federal level if that increase in funding comes from a pass down to an organization from government agencies. These directly relate to the COVID funding streams I have presented in that dreaded word that everyone talks about called single audit. Typically, an organization spends $750,000 or more in total federal funds in a fiscal year, there is a need for a single audit. With a flood of the new COVID fundings into the organizations, it is very likely your organization needs a single audit for the first time. A single audit is an audit of a program or a group of programs funded with federal grants and is needed in an organization spending $750,000 or more in these funds in its fiscal year. A single audit looks at funding requirements within the grant agreement, compliance supplement, and other federally mandated guidance, along with the organization's internal control, all of which are tested for compliance. These audits are often extremely detailed and require a substantial amount of time and effort on both the organization's management and the auditors. They're also costly, and such costs are based on the number of major programs. Again, the increase of cost needed a single audit or needing additional programs audited can impact the organization. Until COVID-19, all federal grants with CFDA numbers were considered in the determination of a single audit. However, there is now funding that is excluded from this. This is the reason for my red and green CFDA numbers. The red CFDA numbers represent federal grants subject to single audit, and the green represent grants that are not. Per the Journal of Accountancy, it is expected that thousands of entities will need to undergo a single audit due to the provider relief funds alone, not considering the other dozen or so coronavirus funding streams. When reporting on a single audit, the auditors are required to document significant deficiencies and material weaknesses within the published financial statements that are typically only documented within a management letter shared with the board of directors and management. If such findings are reported, it could damage the reputation of the organization. As a takeaway from my presentation today, I wanted to leave you with some best practices to ensure preparedness as you navigate through the flood of COVID funding. It is very important to read the grants and other documents identifying if a CFD number is associated with dollars you have received. Consider tracking the awards amounts and amounts expended for those awards on a spreadsheet. Always discuss the tracking of these activities with your accountant so you're all on the same page. Be sure not to allocate expenses to multiple funding streams. No double dipping. As a takeaway from my presentation today, here are 3 sources that will help assist your organization regarding any COVID funding related that you've received during the last 18 months.